So in this video, I want to go over one of my favorite wheel strategy techniques. I call it the income trifecta because it allows you to profit from selling puts, collecting dividends, and selling calls. And I'm going to show you the exact strategy I use and how to implement it for yourself. All right, let's get into it. So here's how the strategy works. In a nutshell, you want to find quality stocks with upcoming ex-dividend dates in the next week or two. And then to make sure you collect the most amount of premium possible, you then want to sell an at-the-money put, which expires right before that ex-div date. And you'll sell this cash secured put with every intention of being assigned. You want assignment. Being assigned isn't a bad thing. And if you're assigned, then you immediately will sell a weekly covered call just outside of the range of the dividend amount. And ideally, your shares will get called away after you collect the sweet dividend, of course. And this ideal income trifecta trade should take about 2 to 3 weeks for all of these to play out. So you see that there's an ex-dividend date coming up, and you sell a cash secured put right before that, hoping to get assigned. And then once you get assigned, you have the shares, then you get to collect the dividend, and then you sell a call on those shares. And hopefully, your shares get called away after you've already collected the premium from the put, collected the dividends, and then collected the premium from the call. So that's the income trifecta in a nutshell. So how I actually go about finding these trades is I use my site yieldcollector.com, and you can just come in here and create a free account so you can track all of your poor man's covered calls and wheel strategy trades, and it's all free. So you could track all of these for free. But I created a tool called the Wheel Strategy Toolbox, and I'm going to be releasing it today, and it's right here. But this is a premium tool, so yeah, you can use track all your wheel strategy trades just as you've been doing for free. You can keep doing that. But this right here is a premium feature. So if you want to, you can just click on this unlock icon here and it'll take you to a page to be able to upgrade it to see this wheel strategy toolbox. And once you do, you could just go here and then go to the income trifecta tool right here. And this is how I find all of the opportunities. And that's what I'm going to go over now. So these scans are updated once a day before the market opens. I like to check these every day for new opportunities. And if you come down here, it says Yield Collector Strategy Info. It's just pretty much a recap of what I was talking about. It says if the ex-div date is before the next expiration date, then I enter the trade as a covered call, aka a buy right, to capitalize on the dividend. If the ex-div is after the next expiration date, then I enter the trade as an at-the-money cash secured put. This will give me the most premium and a high chance of being assigned shares so I can then capitalize on the dividend in the following week. If my put expires worthless, then I'll just open a buy right to capitalize on the dividend. And it says, note, this strategy is assuming you want to ultimately own the stock. Do your research and make sure it is a quality company that you want to own for the long term. Wheel strategy stocks should be hold forever type stocks. And if you want to be more conservative, you could sell your puts at the price channel lowest low and sell your calls at the price channel highest high. And I'll show you how to find that value. And let me show you how this scanner is laid out real quick. So right here is the symbol, and here's the company name, and here's the current price. And this blue column is the next option's expiration date. And right here, it says ex-div before, and right here it says ex-div after. So if the ex-div falls before the next expiration date, if you wanted to trade this, you would do a covered call on it to make sure. You would do a covered call at December 15th to make sure you captured the dividend for Devin right here, which is on 12/14. But if the ex-div falls after this expiration date, you want to make sure you sell a cash secured put at this expiration date right here. So for Altria Group, you would sell a cash secured put at December 15th. And then if you do get assigned, then you could, in the next week, immediately sell a call. So you capitalize on the dividend and sell a call. So, and this is a pretty mighty dividend for Altria Group right here. Right here, you see this dividend yield. And if you click on this, it'll quickly calculate the 5-year CAGR dividend growth rate. And if you go down here, you can click this right here and you see the 52-week low and high. And here's the price channel calculated for you. So like I said before, you can choose to, sell your cash secured puts at this lowest low price channel or sell your covered calls at this highest high price channel. And down here, you can see how it's performed relatively to SPY over the last 5 days, 1 month, 3 months, 6 month, year to date, 1 year, and 3 year. And the next feature is pretty cool right here. So I'm going to do it for HPQ. Click on this little dollar bill icon right here. It'll bring up a DCF calculator with pre-filled fields right here. And it has projected free cash flows, projected terminal value. And it has a weighted average cost of capital, which you can adjust here if you wanted to whatever discount rate you wanted to. but this is a calculated value. You can just keep this as is and just press calculate DCF. And here it says that the stock is undervalued by 45%. One thing to know about, discounted cash flow models is they work the best for companies that have nice and steady growing projected free cash flow values. If a company is a crazy growth company with erratic values, some negative, some positive, if they're all over the place, then it's not going to give you such a great fair value. But if there's steady growing free cash flow values, and you have a good projected terminal value and a good weighted average cost of capital, you're going to get a good result here. So the DCF is great for a lot of stocks, but some stocks it's just not that good on. And I put a little info thing here about it, but that's just the way discounted cash flow models work. And the next thing I want to show you, let's say you wanted to do more research on HPQ, you want to research it further. You go to this right here, this links thing, and I have HPQ now going into all of these separate services. So it's just super convenient way to look up everything. Like I have a TradingView account. It's a free account. You don't have to pay for this. And I have some indicators set up here. I have the highest high and lowest low channel set up here and the RSI set up here. So, I would take a look at this and see if it meets my criteria. And it's just a quick way to open that up in TradingView. Or I could take a look at it in Schwab. It helps, by the way, if you're already logged in to these services, or else it'll take you to the login page, and it's kind of an annoying extra step. So if you're already logged into Schwab or logged into TradingView or logged into Fidelity, it'll work a lot smoother. But so it just takes me right to the HPQ page right here, and I can check out the Morningstar reports or the CFRA reports. I like both of those. Or, you could just straight up just trade the options from right here. Or you could just click on Fidelity option chain. If you're a Fidelity customer, then you could just, immediately takes you right to the option chain to start trading these right now. So here's the cash secured puts, here's covered calls. Take a look at it in FinViz. I like looking at this because it has automatic support and resistance and it has the moving averages all set up. This is a free account too. You can check it out in Seeking Alpha. And Market Chameleon and Morningstar, you get the deal. It's just these are all connected, to the corresponding symbol. And it's just a quick and easy way to do research on all the stocks that are in the list. So as far as the stocks that are currently in this particular list, since I'm interested in doing the income trifecta, I would just be focusing on the stocks that have, dates in the XDiv after field. If they're in the before, then you can't really sell cash secured puts on them. If you want to collect the dividend, you would only be able to do covered calls. But if you just want to do covered calls, then focus on these ones right here, XDiv before. But since I'm looking for the income trifecta, I want to focus on ones in the XDiv after. And these ones are a little tricky right here. Like you'll see this Huntington Bank shares, it has an XDiv before, is the same date as the XDiv after. So this one you can't really do for the income trifecta because if you sell a cash secured put on this date, by the time you're assigned shares, you won't be eligible for the dividend. So these ones I kind of avoid. So I would just look for something like this, like Altria Group would be one, or Southwest Airlines, Vistra Corp, whatever that is, Car, Philip Morris, Hess. Actually, Hess, I wouldn't even do either because you're not eligible for the dividend on that one. And this one, don't really know that company. You can go to the next page. And here is, Broadcom. This is a tough one because, it's so expensive. It's, $94,000 covered call. I'm not really in the mood for that right now. But Pulte Group is definitely something I would do. I've done that before on Pulte Group. So I might, research this one further, check out the DCF on this, see what's going on. And you don't want to live or die by these DCF, values, but I like to look at them. So this one is undervalued by 36%. So, I definitely research this one further if I wanted to do it. Maybe, go over it here and check it out in TradingView. And, it's way past the overbought for the RSI, and it's the tippity top of the price channel. So, it's been on a heck of a run lately, but, I'm not sure if I'd be so eager to get in on a cash secured put for this one right here. But yeah, that's why you do research on them. But this is definitely stocks in a serious uptrend right now. These are the ones I would focus on right now, the ones with the XDiv after. And so either probably Pulte or probably something like Southwest Airlines. I would definitely take a look at this one even closer. Check the DCF for this one. This one's undervalued by 100%. So, according to this, This is definitely an undervalued stock, and I would probably take a look at this one further. The process I go through every morning, I check these, and if there's anything good, then this is what I do. I sell, a weekly cash secured put on it, hopefully, and at the money cash secured put, then hopefully I get assigned shares, then I immediately just sell a call on that for the week right after the ex-div date. And hopefully, it rises a little, my shares get called away, and, in the meantime, I collect the dividend. That's the goal of the income trifecta. So there's a lot of cool tools in this little toolbox, but another one I want to show you since we're on the topic of dividends is the dividend calendar. So right now it's set to this week, so it has all the ex-div dates from this current week, December 4th to December 8th, but just go to next week, and you could see all of the ones that are coming up. Maybe this is visually a better way for you to see which dividends are coming up if you want to, get in on a covered call right after one of these. So you could potentially just capitalize on the dividend and the covered call. And you see this little dollar bill here. So like right here, I put this thing, all over the place throughout this toolbox, so you can calculate the DCF a lot of ways. And this one is currently undervalued. And here's that same links thing. So yeah, I think these are handy little features, so I try to weave them throughout all of these little tools. So this is another cool way to see which dividends are coming up. So I hope you could see why I love the income trifecta strategy so much and why it's pretty much my go-to strategy right now. It's a great way to get in and out of high quality stocks while extracting as much income as humanly possible. And remember, if you want to keep track of all your Wheel Strategy trades for free, then make sure to check out my site yieldcollector.com. And once you have a free account, you can then upgrade to premium and find these opportunities for yourself every day. And if you want to see more content like this, make sure to like this video and subscribe to my channel. I really appreciate it. All right, talk to you in the next one.